All right. Well, thank you guys for joining the podcast today. I'm joined today by Kris
Puskar.
Kris Puskar and Christina Brozyna. And what institutions are you guys with?
With Eastern Bank.
Okay.
And I'm with M&T Bank.
Excellent. And you guys are on the Small Business Banking Committee here at CBA.
Correct. We're chair and vice chair.
Chair and vice chair. Excellent. We got all the power and knowledge in the room. It's going to be a great conversation. I know you guys had the committee meeting yesterday, and I want to talk about the number one things that were on your mind. And I imagine a lot of the conversation had to center around the kind of disruption in the banking environment that's happened due to the failure of Silicon Valley Bank, the failure of Signature Bank, how customers are reacting. What are you hearing from that? What's the reaction been to those things?
Yeah, it was a big topic of conversation yesterday in our committee meeting for sure. And I think there's a couple of different things, right? So one is, how can we help service those customers if they choose another financial institution that they want to bank with? And then secondarily, the safety and soundness of our own financial institutions and really working on retention of our clients. And then the safety and soundness of the industry as a whole. I think those are really the big things that came up yesterday. With that, you have a lot of deposits moving banks. So, as you think about that, you want to be able to take on new clients, but also retain your own. And then you also worry a little bit about fraud and people having, account takeovers or fraudulent wires. So you're really trying to protect clients against that as well.
Really well said. How has the trend been I imagine there's this immediate, I got to pull my money out of the banks that are failing. And then how has the conversation evolved with clients of your own banks or from what you're hearing from other members of the committee in terms of withdrawing funds for just going, hey, I want to move to one of the big guys that feel like they have an almost explicit guarantee for all deposits. How is that conversation evolved with clients? How does it feel right now?
Yeah, I mean, I think it's different for each client, right? So I think some, you have a simple conversation and talk to them about the safety and soundness of your financial institution. They're satisfied with that. Other cases, they want to take advantage of more FDIC coverage and they have a product or service that can help them with that. And in some cases, they do want to diversify and they want to take a look at multiple banks for their relationships and maximize their FDIC coverage. So you really just have to have a conversation and find out what's right for that client.
Yeah.
Yeah. Maybe what I would add is a lot of the banking that we do is relationship driven. So the trust, the knowledge of the bank, the presence in the community, they know us, they know sort of what we stand for and what we're about. The folks that I feel like have a lot of questions are probably folks that don't have the relationship, as close of a relationship, or the media has really spun this to their advantage and they're getting a lot of hits and a lot of likes and a lot of draw, but not everything that's being shared is understood. So it's just piecing together and having a person that they trust that they'll have the conversation with.
Yeah, it also reminds me why I had this underlying nervousness about this whole experience in that I feel like community banks, while often maligned by, I wouldn't say maligned, but I think a lot of consumers like a digital experience. The big banks kind of have an advantage in investing, but in the supporting small businesses where really you do rely on relationships, I really worry if this causes us to weaken our community banks, our regional banks, it'll really weaken our support for small businesses generally that really rely on those relationship-based banks in their communities to support them. And I just that would be a real blow to our ability to support small businesses and the economy generally if we were to lose support for the community banks because there was nervousness about deposits and that caused them to go elsewhere.
It's spot on. And what we have seen actually in the business banking space, that is the spot they're moving the least. They're moving retail because they all get a CD.
So easy.
Easy. I'll just get something online and I don't really care. I want the insurance. In the commercial side, right, they're likely dealing with the CFO. They may or may not have a relationship. And moving billions is easy because they can do it in tranches. But we haven't seen the movement in the business banking space.
That's specifically.
And we've seen some, but not nearly to the degree. And we actually heard from Curinos, and that is industry known. So from the industry perspective,
the small business deposits have been a little more.
Yeah, a little more spread out between larger financial institutions, community banks, and some online banks as well, and some smaller credit unions. So I think that's good news for us as a whole.
More sticky.
Have there been any, when you see a lot of inflows and outflows, I mean, the number one thing that my mind goes to, maybe it's because I come from the technology space, is fraud. And that just looks like a moment where I go, hey, as an attacker, as a bad actor, man, this is a moment where a lot's happening. A lot could fall through the cracks. It seems like a time to to attack it, so to speak. Not that it's not advice for any would-be attackers out there, but it seems like a moment where you have excessive risk compared to maybe a normal environment. Are you seeing increase in fraud, and how are people adjusting to kind of trying to support inflows and outflows that need to be done to support those businesses, and also be careful about fraud when people are moving in large sums of money on a frequent basis?
Yeah, we haven't really seen it yet, but we are concerned about it. And I think the key is to really make sure you have really good conversations with your customers and advise them of potentially what's out there. There are some products and solutions on the Treasury Services side that can help you protect against fraud, but a lot of it is just your own internal controls as well. And so we really try to be mindful of that and have those type of conversations with clients.
It is fascinating. The biggest fraud that we see is account takeover. So they perpetrate, they act like they are the business owner.
Yep.
They tell their CFO, right? So it's a tricky spot because it's still the advice and guidance that when you're connected to your bank, like if you're listening and you have some of the services, you either see it or you don't open the email, or right, you sort of prevent that takeover. But should it happen, then the hope and the expectation from the bank is, hey, can you just help us with this? Will you fill in what we lost? Because we, obviously we didn't direct this to happen. And it gets back down to relationship and just that tight connectivity, which you can't get from the biggest or the fintechs. Like they're not offering relationships, right? They're offering great services, but that is our strongest suit.
Interesting. I wanted to maybe pivot away from recent troubles to longer term trends.
Sure.
And I'd love to think about, like, what are the innovations you guys are seeing happening in the SMB space? Like, what are new products, new offerings, new capabilities? And one of the things that got me thinking about this was the experience during PPP, where we really implemented new processes, digital processes, often very rapidly, some more successfully than others. But it felt like this kind of accelerated learning moment. We said, hey, we can actually do something pretty different if we have to. And customers actually, there's the government guarantees and all sorts of reasons that was a different kind of program. But I do think that the capability to quickly access lending and funding was a really interesting moment in time where we saw that. We saw how customers reacted. Do you see that driving trends towards faster adopt? What are the trends you see in the SMB space in terms of products?
Yeah, I think there's a few. I think you hit probably the number one spot on, which is, coming out of PPP, the digital experience for the customer was really end to end. And they really appreciated that because it helps with the simplicity, it helps with the speed. And I think there's a demand for that. And so I think you'll see an increase in that. Right now, some banks have that. It's typically for smaller dollar loans.
Yep.
But I think that will continue to grow. I don't know if you get the largest of the large loans ever done that way, but certainly there's probably
tens of million CRE loans are probably not the ones going instant digital. I'm probably going to
But could you
look
take
at the
it
building,
from 50 to 250 to 500,000? Those are things that I think that you could look at. I think the other thing is we see a big spike in demand for SBA lending. So really understanding the programs that are offered through the SBA is really important for your institution, so you can offer those to your clients. And then we're starting to hear a lot of information around special purpose credit programs, which are really set up to serve the underserved communities within small business, businesses that are owned by people of color, women, veterans, LGBTQ, people with disabilities. And so those programs are gaining a lot of traction now. And I think that will be great for the industry as well.
Awesome.
Do you have any thoughts on I had not heard this statement about SBA or the SPCP, the special purpose credit programs. Do you know what's driving the demand? Is there something behind that? Or what do you think is causing people to be more interested in those programs right now? Because that's a really fascinating statement. And I was totally unaware. So I'm just kind of curious what's underlying that. It's
our ability to serve more people with those products. So it just really opens up the number of folks that we can help. Because the guarantees allow us to be much more generous and have a lot less scrutiny, like time in business, right? We would want to see more history with a traditional relationship, but we can do more to help serve them.
Yeah. I think there was some information too that was obtained through PPP where some of those underserved communities weren't provided PPP loans as quickly as maybe they should have through the funding process. I think that that put some heat and light on the industry to make sure that we found a solution to help those borrowers. And so I think that plays into also what Christina is mentioning. And then the SBA trends, I think that there's some great programs out there that if you partner well with the SBA on programs, you can probably lend to more customers than you typically would be comfortable with because they provide guarantees on the loans. And so I think really trying to use those products to get more money out into the small business community is essential.
So I'm going to ask this question. How does one partner well with the SBA? I mean, I think one of the big complaints I heard around PPP was just it changed a lot. And then the integration with like the guarantees, it was not easy. And I feel like this is the same question I ask people about fintech partnerships, which is like, I feel like there's times that it works well and times that it kind of it's a great idea and then it doesn't go anywhere. It kind of sits on the shelf and doesn't get used because there's not a good sense of partnership and like a real operating rhythm. And so you said that if you do SBA partnerships, so I'm curious do you have advice on how one does partner well with the SBA or make these things more or less, or if you're approaching an SPCP, that's a very specific kind of program that I think can feel risky or a little nervous people to implement. Like, how do you do that well? Like, what are the secrets, the tips to like actually execute well in that space?
Yeah, I think with SBA, I think one of the things is, first of all, having a strategy around it. It's hard to just sort of dabble in SBA lending because you really need to stay on top of the SOP to make sure you're following the program guidelines. And so having a strategy, I think, is core for number one. Number two, I would advise have a good relationship with your local SBA office where you can bounce questions off of them or scenarios off of them. And they can provide you feedback and insight. And then I think you need to have good controls in place to make sure that you're not putting those SBA guarantees at risk from the servicing work that you do behind the scenes. And I think if you do those things well, it's a very beneficial program for both us and our customers.
That's exactly right. I agree with everything you said. And when you get the experience under, like going from, doing a few to doing hundreds is a very easy transition if you have those controls and the folks in place. That this is not a place where you try to reduce staffing and hope that it all goes well. Like you staff appropriately, you follow the controls, and you can really scale it very quickly in a meaningful way.
Fascinating. Is there a reason that now that you mentioned PPP, but do you think there's a reason that interest in these things is increasing at the moment? And I want to kind of wrap that in with a general question around demand around small business lending, because I think the committee was talking about some trends around demand. Talk to me a little bit about like what's driving demand and why you think those programs in particular are seeing more demand. Now, is it driven by our experiences in PPP and the realization that there's people out there that need these funds that we weren't serving before, or is there some underlying business reason that people are kind of like, hey, this is a moment to really invest in these things?
Yeah. I mean, I think in terms of loan demand, just to start there, I think that's a tricky topic right now. I think it's a very uncertain for this year and possibly into next year because of all of the challenges right now in the economic environment that we have, which is rising interest rates, inflation, labor shortages, supply chain issues. So the willingness of or the desire for small business to borrow money right now is a little uncertain because they're dealing with uncertain times. So we'll sort of see where that lands. But I think, when you think about the SPCPs and serving, underserved communities within small business, I think there is a demand for what we have sort of already talked about. But also, I think, the SBA has also come out and said they want to be able to help banks funnel more dollars into the communities, both in terms of underserved communities, but also just small business in general. Yeah. And so, really trying to think about ways to get creative to lend more money to our customers who are in need, I think is critical.
Well said. And I think they want advice and guidance. So they are more interested in taking time to spend with their bankers now and getting that. So we feel really good about making a difference and spending time and having those interactions. And as Kris shared, probably your larger, more stable clients are funding their own transactions and acquisitions or whatever investments they're making in their business. So it is a perfect balance because there's capacity in the market and this is a place we can make a difference. Yeah.
I do love that focus on making a difference in the communities that the regional community banks have. It's just it's really nice. It is. It was one of the big surprises for me. I'm surprised it's going to sound bad when I say it this way, but like coming from tech into banking, you kind of there's not always a great perspective of tech in the world now generally, but of banking. And when you get inside the world of banking, small business banking, community banking, consumer banking, and you realize that people are really just trying to it's not exactly living against a wonderful life, but out there trying to support the communities of businesses prudently, but as much as we can. All right. I want to ask about one more technical thing, which is I know there was some discussion about 1071 rulemaking, final rules for the uninitiated, not in the space. What is the 1071? What is the process that's going on, and what are we talking about there?
Yeah. So if you're familiar at all with HMDA, which exists.
I'm familiar with HMDA. All right. Which is a good starting point.
Yep. So they're trying to capture sort of race and gender information at time of application. And so they're trying to replicate something like that on the small business side.
Interesting.
So when they can take a look at application data, they can see then more clearly, are there certain races or genders that are not being served the way that maybe some others are, right? And so it's a way to really sort of safeguard that fair lending is taking place as much as possible in the small business community. So we're anxiously awaiting a final ruling. It's due by March 31st. And so once we get that ruling, we're right up against the wire. Once we get that ruling, then we all have, we believe, 18 months to implement those processes. And you have to be able to capture the information up front, but also to be able to provide reporting behind
reporting on it.
Exactly.
Any thoughts on what's going to follow on from that? Because there's the capturing of the data, there's the reporting of the data, and then there's are we happy with what the data is telling us, and what are we going to do about any areas where maybe we're not happy? And that's an area, we've spent, to be honest, at Upstart a lot of time because I think this is a very tricky issue, to be honest. Approval rates, actual creditworthiness of the underlying applicants, the applicant pool versus the maybe demographic pool of small business owners in your community. What's the sense of what follows on from collecting and reporting on the data in terms of actions or expectations about what the data is telling us?
Yeah, I think it's a multi-step process, right? So first is implementation. Second, then you have to go through a process of a period of time of actually getting meaningful data.
Enough
you
data,
won't
for
have
sure.
it, in the first few weeks, maybe even in the first few months, you won't have it. But certainly 6 months, a year, you'll start to have that data. I think it'll be interesting for the industry as a whole to see sort of where everything lies. And then as your own financial institution, how do you compare to the overall averages? And from there, you may implement strategies to do things differently, to either improve things or change things or tweak things. So I think as a whole, it's going to be a really interesting exercise for sure.
I would add, I agree with everything Kris said. That's why some of these special purpose programs are so critical. If we can do these at the same time and align those, hopefully we'll all be happier with some of the outcomes.
For sure.
So we're in New York State. So the first move on it is we're interested to find out how consistent with 1071 in terms of implementation, because some of the things New York State wants us to collect in New York is not legal to collect in other places. So how do we marry the two together and make sure that the customer experience isn't wildly different depending on, and the banker's experience, if you have a remote banker, right, where they're coming in from, because we try really hard to do the right thing by everyone at time of application and sort of through fulfillment. So the cadence of some of the additional things being rolled out, it'll be interesting to see what we learn, because New York State's going to go first. What did we learn? And then how do we hopefully learn and help as the 1071 ruling continues to follow on after?
New York likes to be first. DFS is a little aggressive on that. And it is difficult if you operate in multiple jurisdictions to have, you can have rules where you're required to do this here and prohibited from doing it there. And that becomes very hard, particularly in a world where at least some of our transactions are virtually mediated. So maybe the banker is supporting customers in both states going, I don't want to do the wrong thing. I'm trying to do the right thing, but man, it's not easy when the rules vary so much.
That's exactly right. And you scale that, the technology that we will all use to support it, whether it's, Encino or, folks are doing a really great job of helping build this in. It's going to take them time too to build it in. And so we're trying to do a bridge and sort of a manual way of doing it in the meantime. So we're hoping for some grace in that period, but we certainly all want to do the right thing and do more loans in this space.
Has anybody been looking? You can just tell me no, but there is the CFPB published the BISG methodology to estimate ethnicity, race, gender from applicant. I think it takes like zip and last name roughly. Yep. And I'm curious if anybody has been previewing what their 1071 results might look like, because you can it's not the same as collecting the way HMDA is, but you can kind of get to roughly the same point with approximations doing that and at least understand what does that look like. And I'm curious if that's something the industry has been trying to get a preview on where they're going to land by using some of that methodology, or if you're just going to implement the final rulemaking and see where we land. Yeah.
I think it's hard to speak for every financial institution. Sure. For my own, personally, we absolutely have, and we've actually launched a special purpose credit program just a few weeks ago. So we had to get data from our institution to justify the program and get it approved. So we definitely did. I would be surprised if most institutions aren't either thinking about an SPCP or at least preparing for 1071 and saying, give me an estimation of sort of how we fall here. Where do we think we're going to land to start? But I'll let you speak.
We did a similar thing being with the New York State DFS, so we had to get out in front of it. So we are feeling good about where we're at and some of the initiatives we're taking in that space as well.
Awesome. Well, let me, as we come to the end of this conversation, what are other big trends or topics we should talk about when it comes to small business banking? I mean, we kind of had the things that were on my list, but is there anything else that's top of mind for you guys, or you think that's a big emerging trend that's going to be impacting the space the next year or two?
Yeah, I mean, the only thing I can really think of other than what we've spoken about is really just providing customers information. Right. And I think we think a lot of products and services, but and we need to do that as well. But I think small businesses are looking for information about how to run their business more effectively, more efficiently. How do I grow? And so a lot of banks are thinking about education for their small business clients. And that can be done through a website. It can be done through seminars. It can be done through your sales staff and making sure they're educated to be able to have those types of conversations. Most likely banks are probably looking at all the above in some way, shape, or form. But I would think that would be the other big trend in the industry that I think we're looking at over the next year or so.
That's spot on. I would say the thing I would add is it'll be really important that we help navigate our customers through these inflationary times. As Kris shared some of the things that we talked about yesterday, this is a really difficult time for a lot of small business owners, whether they borrowed and now it's just so much more expensive, or the labor shortage. How do we help through the advice and guidance and education navigate, probably just like all the banks, not all the small businesses make it, but how do we do our part to keep them as successful for as long as possible? Or how do we help them find other partners to maybe come together with, or industry experts? Like, how do we do our part to be the convener so they can continue to run their business?
Yeah, it is crazy to think about the economic environment that we live in. It's very disruptive. And I saw this really ridiculous to me comment somewhere that, like, depositors should lose their money in the context of a bank run because it was their job to be, choosing the bank they worked with by looking at the finances. I thought your perspective is that the CFO of a small business should be looking at the balance sheet of local banks and determining who's making the most prudent risk management decisions in terms of interest rate risks with their excess deposits. And that's the balance on the system. I think they're just trying to figure out how to manage their own balance sheet through this. And they're not so worried about it because it's kind of unbelievable to think that we were supposed to be looking at the interest rate hedges that SVB maybe could have put on the bonds they were buying, or whether they were buying too many long duration bonds at too low of a time. I don't think that was a small business. They get their own things to worry about. Right. Yeah. We should be helping them through that as opposed to asking them to be our safety and soundness check on the asset management of the bank they're working with.
Well, and you hear some conversations too around, well, these businesses shouldn't have had more than $250,000 at any one institution. And it's very difficult for small businesses to do when they're worried about, making payroll, paying their vendors, they have money coming in. Like, it's not just easy to park 250 here, 250 here, 250 here. So I think to your point, they make the best decisions that they can with the information that they have, but they're worried about running their own small business, and they wear multiple hats within that. So it's tough for them to keep on track with everything that's happening in the market, in the banking environment.
Yeah. And I totally agree. And I think there's this kind of weirdness to that answer, like, wow, they should have opened accounts. Well, like, that's just this very strange to me regulatory arbitrage that's taking place that doesn't really meet the spirit of what the insurance is meant to do. Like, I'll actually insure all your money. Just work with a whole bunch of different banks and spread it around. Like, that feels weird. And so I just wonder if there's going to be some change in the way regulators, and I don't like you guys say this, but I think if we're saying, hey, what we really want you to do is just open up accounts with 10 banks, and then somebody's going to come in and be a digital layer that like automatically spreads your money, then we're not really adding anything. We've just added a whole bunch of complexity to land in the same place. And we ought to find a simpler way to help people. It is true. Like, it doesn't take a very large business to need more than $250,000 just to make monthly payroll. Correct. Let alone accounts receivable or invoice payments for different things. Like, that's not that much money in the context of a business is paying a decent number of people. And I don't think it's unreasonable for them to expect when they put it into, like, I was kind of stunned when my my financial advisor called me and said, Jeff, we got some money in the checking account and we want you to move it out because it's safer in a money market. And I thought, man, what world have we come to where I'm getting the advice to pull my money out of a checking account and put it into a money market account for safety, not for yield, right? For safety. And I thought, well, it's an interesting time. And I think we kind of, to support the small businesses and the consumers, that, like, consumers who have more than $250,000 in the bank account, I feel like are relatively savvy typically and understanding the risks they're taking. But the small business, that's not a massive business. And it does not make sense to me that we're putting them at the risk for, like, having looked at the balance sheet and the different asset purchases by the bank that they're working with. And that just seems crazy.
Yeah, absolutely.
And it's fluid. It's not like they put it in there once and set it. Like to continuously expect the small business owners to look at all the transactions.
Yeah, I pull up that quarterly report in my bank every quarter and go, hey, what are you doing? What are you guys doing? I mean, 10-year treasuries? Why you should be in the twos? Be in the twos, man. It's interest rates are moving. Like that. I don't think that's the right expectation. Well, thank you guys both so much for joining us today. This was a fascinating conversation. I certainly learned a lot. I'm sure the audience did as well. So I appreciate you taking the time to do it.
Thanks for having us.
Thanks for having us.